Just want to say welcome, everybody. This is Professional Financial Advisors. I'm Brett Heisel. We got Mark Mayfield, Certified Financial Planner, and Mark Workmeister, Managing Partner and Certified Financial Planner with PFA. We really wanted to kind of do a fireside chat, just kind of talk about, why we do what we do, maybe a little bit of industry, and kind of go through what makes PFA PFA. So I appreciate you guys taking the time. I know that you're extremely busy, so thank you for jumping in with us today. We're just going to kind of ask some questions and try to have some normal conversation as we move through. And my first question is for Mark Workmeister. Growing up in central Nebraska, how do you feel your background has influenced the way you approach your clients today?
Southwest Nebraska.
My bad.
Southwest Nebraska.
Where's that line? Is that like south and northwest?
Hayes County is definitely Southwest Nebraska.
Fair.
So south of here.
Sure.
To answer your question, I think the big thing, whether it's Hayes Center in a small community, is that, those communities, all those services you think about growing up with, your teachers, all that stuff, it's all built around trust. It doesn't matter, whether your car worked on, or you go to buy insurance, or you go to the bank. Ultimately, you're trusting the people you work with because them. It's not just they're not just the people you work with; they're your neighbors and your friends and everything else. And I think that carries over a lot to this business, and that people at the end of the day, some of the things we may recommend or some of the things they do, they're not real knowledgeable on. At the end of the day, they're just trusting us. And it's the same as the relationships we had growing up with people that we were trusting in those communities because we didn't know all of that stuff. And so you trust them because you know community members, like I said, family, friends.
A lot of that local hometown feel where you really care about your neighbors and you care about the people, what really makes Nebraska, Nebraska.
Yeah, and that's one of the great things about working in a small town is, obviously, we don't know everybody that comes through our door, but a lot of the people that come through our door, we do know. It means a little bit more when it's the case.
Yep. Mayfield, my next question is for you. What initially drew you to the financial planning and this industry?
Yeah, so kind of got into the business when I was in college. Kind of shadowed a guy, was an intern for a financial planner in Lincoln. And it was super rewarding to watch him. And I still feel the same way today, kind of working here. It's rewarding to watch people attain their financial goals. There's a number of people, I think Mark can probably attest to it, but there's people that don't think they can retire. But when you sit down, you start doing a financial plan and you're able to show them like you've done a good job, or we've been working with them for an extended period of time, and we've turned it from, well, I'm going to work until the day I die, to where now we've put a plan in place, we've saved properly, we've invested in the right accounts, and now they're able to attain those goals and retire. That it's super rewarding to see. There's also the part of educating people, to Mark's point, these people are your neighbors that we work with. The financial world, I think, as a whole is pretty complex. I mean, there's a lot of different financial products out there. There's different ways, every advisory firm structured a little different. And so, educating people on what they have, why they own it, how it fits into their piece, is also rewarding. Just being able to help see them clearly understand why they're doing it and watch them grow, in their financial planning path. And then, just like the new challenges. So every day is something different, right? Not every day is the same. Not every person's financial picture is the same. So that's part of, like, in a business, it keeps you motivated and energized to show up to work every day, helping others, new challenges, and seeing people succeed.
And you're originally from this area, correct? What drew you back to this area?
Yeah, so from North Platte, went to UNL for college, worked there for a few years afterwards, and then ended up approaching Mark to see if there was any opportunities to move back. North Platte, my parents are still here. My family's all from the North Platte area. It's always just been special to me. So I think it's a great community. It's growing. So just happy to be a part of it.
Do you feel like coming back to this area gives you that, like, a little bit more care, right? Like, hey, this is my hometown. I really want to take care of the people that you help advise.
Yeah, for sure. And like I said, everyone here is your neighbor, right? We're all part of different organizations. You see these people at church or out to dinner or wherever it may be. And it does in a small North Platte seems big, but really when you get down to it, it's not all that big, right? Everyone has a connection to somebody, you know everybody. And so it makes it that much more impactful when you can make a good impression on somebody else and they're willing to refer you to another friend. Just makes it that much better.
Yeah, I mean, having that care in this industry as a whole is huge because we really do have the opportunity to impact a lot of people's lives and generational and, family legacies, right? So getting to know those clients at a deeper level, and that kind of brings me to the next question for you, Mark. When somebody comes to you about investing or saving for their financial future, what is the first thing that you want to understand about that?
Yeah, it's a hard question because honestly, there's there's two sides when you're doing financial planning, investing planning. Part of it's the number side, so kind of the science, if you will. And in order to really think at the numbers too, you really have to know everything. But on the other side, it's kind of they say the science and the art. So the art side, and that's kind of tailoring every single plan to them specifically, how they feel, what their emotions are, what they're going to be comfortable with. Like, you want your client sleeping at night, not worried. So when we first start, there's not one thing. I want to know everything. I mean, usually in our first meetings, if it's an hour meeting, I'm listening for about 50 minutes of it. There's not a lot of talking on my side because I just need to know everything there is to hell, and I'm just trying to get a feel for not only their numbers, but as a family or individual, what they're going to be comfortable with. And so I don't think I can narrow it down to one thing. It's a lot of listening. You put everything on the table, and I think that kind of comes back to sometimes there's a misconception when people are working with an advisor. I take the advisor where literally, like when I work with people, if anything comes up, I want you to call me and I will advise you on what I would do, as opposed to trying to sell something. And that's why I say we're not really trying to find a certain trigger, a certain thing to say, oh, we should do this. Like I just want to know everything about him, so advise him, the right way.
Same thing for you, Mayfield. When you sit down with that new client, what are some of the things that you want to understand and make sure that you take care of when you're meeting with that client for the first time?
Yeah, I think Mark kind of hit everything on the head that I was going to do. You're building a relationship with them in that first meeting and listening. I mean, those are both the things that he just alluded to. And I think that's what's important, like developing a level of trust, being a good listener, understanding where they're coming from and why they're sitting there in front of you. Because when someone comes in, they usually they're looking for advice, right? They're looking for a solution to a problem they have. And just being able to connect with them, relate with them, and I think there's a different side, to Mark's point, like, there's the other side of the industry. I know I can speak to the fact that I was part of it in Lincoln before I moved to North Platte and joined PFA, but there's also the side where there's kind of an asset gatherer where they really just want meetings. They come in, they sit down, they want your business, right? But they don't really truly get to understand where you come from, what it is that you do, what problems and financial challenges do you have. And I think that's, again, going back to the rewarding side of our business. But I think that's why we've been able to build PFA the way we have is we're really here to listen, to provide sound financial advice. And if it's a good fit to work with our firm, that's great, but there's others that we listen to them and we may not be able to help them per se. So I think that's kind of what sets us apart.
You guys have both mentioned the word financial plan. To me, that's basically saying I'm making sure that I'm paying my bills every month, right? And got the cell phone staying on and Hulu staying on for the kids, right? And we still got Disney rock and roll it. Will you guys break down what you would consider a financial plan? Workmeister, we'll start with you.
It could be something simple. It can be something as far as we're saving 6% into a 401k, and we're invested this way, and at the end of the day, we're going to hopefully have this much money retired this age. It could just be a simple, for younger people, be a simple goal. It could be, we need to save this much because I want I want to pay for half of my kids' college education. So a lot of the planning is really just setting some goals, and sometimes those goals are hard to set specifically when you're younger. So that can be a bit of a challenge. So for younger people, it's just making sure we're doing all the things we can do. But then we get to retirees, and it's really easy to narrow in on those goals at that point. And so I think when I think of a plan, if somebody says they have a financial plan, what I would expect them to say is, I'm going to do this at this age. I'm going to have my money doing this so I can provide this much income. I need this much insurance. Like, they have everything in their financial, world exactly how they want it to meet exact goals. Like, that's, if somebody told me they had a plan and they could tell me all those things and say, yeah, you sounds like you have a plan. Whether you're implementing a plan, that's a little different story. But that's having the plan in the first place is the first step, and that's what it is to me.
Tick for you. Is that what you would echo?
Yeah, absolutely. Yeah. Having a defined, plan in place of types of accounts you're saving in when you're getting closer to retirement. Where's that income going to come from? How are we going to collect Social Security? How do taxes, come into play with all of those things? So, what Mark said, so a lot of times when we do our college seminars, you can ask the crowd, who in here has a financial plan? Well, a lot of them are hesitant because they may work with a financial advisor, but they don't know if that means that they have a plan or not, right? And then you kind of meet with them as a follow-up, and you start digging into the weeds, and maybe they don't know at what age am I going to collect Social Security? At what age am I going to switch from saving into, this type of account to another? And so that is having a plan, exactly what Mark said. So defining that at certain ages and having a strong structure that can be changed and adapted.
You mentioned the education piece. How do you, because you do a lot of college classes, a lot of seminars. I do some, but not as many as I used to. But when you're doing those things, how do you go about it? Educate the people without making them overwhelmed and thinking, "Oh my gosh, I'm not even close."
Yeah. I think the key thing is I learned this from you, I would say, but just putting it in layman's terms, right? Like, the easiest thing for educating, those people are there because they probably don't understand. For the most part, when people are showing up, they really don't have any ideas. So, walking them through different scenarios, but really making it very black and white. You can do all this research online, and that's what people always say is, we've looked into Social Security online, but we don't exactly understand what it's saying. So taking the time on a one-on-one basis following that. Obviously, the education courses are very broad that we do. There's a lot of good examples and good information, but then sitting down on a one-on-one basis to truly walk through their current situation, and breaking it down step by step in the true financial plan that we have, income distributions, where we're going to draw from, how does Social Security impact, how does railroad retirement or some of those other pensions that are in the area, how did those all play in, and really illustrating it on paper and taking the time to really dissect it, gives them a better understanding of what they have.
Yeah, and I would say too, the classes that we do, from yours, he just mentioned a lot of things that talk about those classes. And the biggest complaint I used to get when we did a 2-night class was that it was only 2 nights and it needed to be 3 nights to cover everything. And now we've got it all the way down to this to 1 night, because for whatever reason, after COVID, people stopped coming to 2-night classes. So now we do 1 night, so we condense a lot. But the one thing I really like about our classes that is different from most seminars is that we don't go in with they're not geared to sell a product. And a lot of the seminars people see, you go in there and every single thing you learn is geared towards buying a specific product that they're trying to sell. And, because a lot of times seminars people do, they're not even licensed to do everything you need to do, right, to be a career planner. So the reason I think we've had so much success with our classes is, number one, they're through the college, and the college, endorses them because they know we just educate, we don't sell.
Yep.
But number two, you could be from numerous different backgrounds, whether it's somebody with a 401k, you could be younger, you could be retirement age, you could be farm and ranch, like you could be any of those things, and there's going to be something in that class that pertains to you that can help you.
Absolutely.
That's actually very interesting that you guys mentioned the education piece and financial advisors. And when we start looking at the education, what does the CFP and fiduciary roles mean to you guys? Phil, I'm going to start with you. How does that play into the education of clients? Obviously, we're not trying to sell anything, but we're trying to provide the best advice, right?
Yeah, I think, going back to like education, right? The CFP is a fairly rigorous exam, one of the top designations, I think, for the industry. But what it does when you're working through that process for obtaining that designation is you are educating yourself on, all topics in the industry, right? So a lot of tax planning, income distributions, stock evaluations. I mean, it truly goes through everything. And by us being more educated on that, it allows us then to turn around and be more knowledgeable to help service our clients. As working as a certified financial planner, we're required to be a fiduciary legally. So fiduciary basically says we have to do what's in our client's best interest. There are some advisors that operate on a suitability standard and some that operate on a fiduciary standard. So it's kind of insane, crazy to think that, there it is. But in our world, if we legally don't do what's in our client's best interest, they can take legal action against us. If you operate under the suitability standard, as long as that product or that financial instrument was, they could prove that that it was maybe not in your best interest, wasn't the best product, but it was maybe suitable given your situation. It's pretty hard to take legal action against a group like that. So I think that's pretty powerful, and fiduciary is becoming, a broadly used term now, whether or not everyone operates under that, but people are becoming more aware of what it is specifically on the client side.
Yeah, I don't think people understand the fiduciary thing. And if you go back to, I think this was around 2015, 2016, the best way to understand how big of a deal the fiduciary tag is that when they passed a law that basically said, if you advise on a retirement account, doesn't matter what it is, if you have anything to do with a retirement account as an advisor, you are a fiduciary. So that law was passed and it was being implemented in 2017 before the new administration acted. But leading up to that, we had every insurance company, every broker dealer calling us saying, you need to call your representatives and make sure that law doesn't go through. Like the insurance companies, the broker dealers, they did not want their employees, their salesmen, their agents to be fiduciaries, because they knew that if that happened and they went and sold a product they weren't supposed to, they were going to get sued. And that's the difference on the fiduciary side is it's putting your money where your mouth is. If we do something that's not in someone's best interest, we don't go to arbitration. We don't get a slap on the wrist. We go to court and they sue us. And that's the difference. So all those big companies, they did not want their people to be fiduciaries because they did not want the liability. And when that happened, what we saw is a lot of high commissioned insurance products. The sales of those products plummeted. They stopped selling it because all of a sudden they were supposed to do what's everybody's best interest and they were legally liable. So they quit doing it. And I think that's the best test of what a fiduciary really is. And I remember we would take calls from a broker dealer insurance company like, no, we agree with this. We think everybody should need a fiduciary. Like, why do you think that? I said, well, that's the right thing. That's the right thing to do. And so, but what happened in that story is that the new administration axed that law. It went back to the old way. All the insurance sales and all the high commission stuff went back up. It's not just insurance, but there's a lot of private placements. There's other stuff too, but all the high commission stuff that people were pushing, all the sales and that went back up, and slowly we've just been kind of working back towards, what we used to be. And that's so I think there's a group of firms out here, registered investment advisors, which we are, that are fiduciaries, and that's a big difference. And Mark's right, that term's thrown around a lot. But we have clients say, well, they said they're a fiduciary. Well, not really. They say they are, I guess, to make it sound good. But now look at your document. Does it say that if you have a dispute, you have to go to arbitration? Then they're not a fiduciary.
And me coming from the insurance world was eye-opening to walk into professional financial advisors and start working with you guys. Because we're not trying to push any product that doesn't make sense. If you need a life insurance product or something along those lines, you guys are going to recommend that. And we're going to work together to try to do what's in best interest of the client. It's not because we're trying to push something that somebody doesn't need. Really acting on the best interest of the client is huge. And it's really been refreshing to work in that realm. So we're going to kind of transition to, you guys have been in this business for quite a while, and you've had a lot of experiences as far as market cycles go. How does that guide you in your recommendations today or the way you advise clients? When you see all these fluctuations and you hear everything that's going on, how does those changes that you've witnessed or been a part of work with your advising?
You'll be yours.
Pass. Spits. I will say that, so kind of my background, the numbers, and just when you have the knowledge that that we had on the historical returns and market cycles, and you understand how these things work, like it takes a lot of the emotion out of it for us. And that's very easy to say because we have that knowledge. So when you're working with clients, and obviously they're hiring us because they don't know all of that, and it's very easy to get emotional when they see their accountants lose money or they turn on the news. Oh, this analyst said everything's going to go down, right? There's so much news out there, negative news sells, and everybody understands that. And so when it comes to working with people, I think the most impactful thing, honestly, over the last, because this will be my 20th year, makes me feel kind of old, but the most impactful thing has been working with clients. I mean, I don't know how else to say it because we have clients that are 65 years old, they have a big nest egg, they retire, and the markets will go down a lot, and they don't even blink. And they say, I've been through this before, no big deal. And then I have somebody who's 30 years old that has never been through that, and they call panicking. And they say, we got to sell. What are we doing? We're just going to ride this market down? So it's kind of like the people, because in theory, the younger people should be able to take the risk and they should not have a problem with the market going down because they're still buying in and doing all those things they need to do. And it should be in people closer to using the money that are the ones getting really scared because they can't afford to take big losses. But it's actually the opposite. The people with experience having seen those things, they're comfortable with it. And obviously we don't invest those two portfolios the same, so they're not taking on as much losses or more than they can handle. But so when it comes to working with people, it's sharing those experiences and it's saying, listen, like we've been through this. This happened at this date, and here's what happened after. We've seen this here before. Mm-hmm. And what we're experiencing, the reason that the markets are volatile is different, but the result is not. And last year there's a good example. In 2025, all the tariff news came out, and the markets dropped. The U.S. markets dropped a lot in a short amount of time. And we had a few people nervous, a few people calling. I say a few, I mean a few, like one or two. Yeah. We don't get a lot of calls about people nervous, honestly. So I think that's a misconception. And the ones that do call, we say, well, here's the thing. You have this, you have this, you have this. We're well diversified. These things are down, but these things are up. And everything, and historically, now's a good time to buy. These things are down. And so we talk through it, but it's really just, working with people as it's that experience. Seeing those people that have been through those downturns has helped me probably better communicate to other people that may get nervous. Like, listen, this isn't anything new, despite the fact that it seems new. And it can be a little emotional because that's the money you saved, and we get that. But, I think it helps that communicate that bridge, so to speak, from taking your emotions out of it and just kind of relying on what the numbers say.
Would you echo? Yeah, I would say like aside from being an advisor, I feel like there's a fair amount of hand holding that gets done, like you're walking people off the ledge. But to Mark's point, like I do feel like it's the younger investor as of late that's become, a little more antsy during times of volatility. Whereas I would say the people in retirement, that have a plan, like I think that goes back to the plan, goes back to the education, like they're educated when they go through the whole process. They understand the periods of volatility and drawdowns. Like if you look at just even like the markets and you see like almost every year we've had a positive rate of return, there's been some sort of intra-year drawdown of a significant percent. They've lived through it. They're going to continue to live through those. It's nothing new, right? But they have the history, the experience investing through those. But to Mark's point again, like, people also say like, oh, I bet you were busy today. Phone is probably ringing off the hook. But like that doesn't happen. So it is the younger people, a lot of the 401k plans. I deal with a lot of the 401k participants, and that's something I've seen like here recently. I had a number of participants that, were fearful for the last presidential election, one way or the other. So they went to cash within their 401k and made an emotional decision. But then they forgot to go back in. They didn't meet with anybody. They did that decision on their own. And they've been sitting in cash for 2 really good years, 3 good years here in the market, and have missed out on a lot of returns. So I think that goes back to like the importance of trying to educate those people at a younger age so that they avoid that. And I think those who have done that, they now see there's a learning experience that cost them some money, but they now understand it's going to continue to happen. It's going to happen in the future. And, we invest all those portfolios different for those.
Yeah, to your education point, I just asked you this because I know you work on a lot of the 401ks, because talking about it, so sometimes people will call and they'll say, we need to get out of the market, and they're not even in the market. But sometimes the education is just educating about what they owe.
Yeah, exactly. So And the example I have is I always think of like coffee talk is what I'll call it. It's like this. But like this, there's somebody, everyone take it here. But there, that's, I always say, like in the down markets, like everybody, and I think that's probably why we don't get many calls, because everybody's portfolio is down. I feel like there's actually times when the markets are up, you'll get a call from somebody that says, like, I was talking to so and so and their account was up this, or they were buying into this position or whatever. Like, why are we not doing it? And then it kind of goes back to like educating them, not chasing returns, not buying into the new shiny object. Um, so same thing with like on the 401k side. That's what I typically see is they get in groups internally within, there might be somebody that has a strong feel that the market's going, down. So they'll tell everybody in their friend group, hey, we should, go into this fund, go into this position. But the people making the trades in their own accounts, they don't know what they're doing. They're just taking the advice from a coworker or something like that. And they truly don't understand what they have to. And that's what Mark was talking about. These individuals that I met with, like, they were in a cash account that's now everyone knows kind of what cash is paying. And like I said, it cost them, but they had no idea what they were really owning. So walking them through that, again, educating them on why, 401ks are a pretty hard plan to be hands-on and actively manage. Hopefully that education sticks with them for the future.
And I would add that a lot of times when we see people that have made bad financial decisions, it was made out of fear. Yep. So they're fearful that they're going to lose money most of the time. And so but the best way to guard against tax increases, inflation, markets dropping, all that stuff is to diversify. And I know people, like, it's a very simple term, it's probably cliche and overused, but honestly, diversifying, holding different asset classes is the best way to guard against all those things. But what people do is they get so fearful of one particular thing, in this case, losing money, that people prey on that fear, other salesmen, they end up buying products. And it could be anything from locking up a long-term CD with the low rate. It could be buying a treasury with a low rate. It could be buying, the new thing is indexed universal life insurance policies. They never lose money. They always go up. Or, annuities. Like, people make those decisions out of fear. And, and for whatever reason, they all of a sudden just say, yep, I don't want to diversify. I'm going to put it all in this because it's going to take care of my one fear. And then they get into it a couple of years and they realize that probably wasn't a very good idea. Yeah. And so I think the fear, and the one fear of losing money is honestly what we see is the culprit for people making some bad decisions.
Yeah. When we start talking about fear and market changes and historical things, there's one thing that's happening in the state of Nebraska right now that's pretty interesting. I don't know how much of an impact it's really going to have on the market. And I kind of want to get your guys' opinion on it. The Oracle of Omaha. What are your guys' thoughts, and is there going to be an impact because of what's happening over there?
Well, let's be it. So, yes, there's going to be an impact. But I don't know that the impact is going to be sudden, and I don't know that it's necessarily going to be negative either. Just because you think about it, Warren Buffett is the one that made so many of these decisions. He's the one that did a lot of research. I mean, he's the Nick Saban, right, of Berkshire. He's the one that drove that thing up. And so when Nick Saban retires, of course, Alabama's going to take a step back. So it's the same type of thing. Like, Warren Buffett retires, like, you don't just replace Warren Buffett. I mean, you don't replace one of the best ever with another best ever like that. No company historically does that. So yes, there's going to be changes. But like, Berkshire is such a huge company and they own so many other companies. Like, if you look at the list of the companies they own, it's like a mutual fund. Yeah, it's like a diversified fund at this point. So all those companies would have to have bad things happen to suddenly go haywire, right? And so it's more about going forward, are they going to have the leadership that continues to make investments in the right companies? So this isn't a big sudden thing where I think people need to go start selling Berkshire. I think this is more of a wait and see and give the new leadership a chance and see what they do and just kind of see where it goes. Because, when Warren retired, what you own didn't change. He suddenly did just sell everything and give the new leadership a chance to go start from scratch. Like, they still own most of the same stuff. So over time, I would expect that Berkshire is probably not going to have the same returns they had the last 50 years. But to that point, Berkshire hasn't had the same returns the last 20 years that they did the last 50 years. Like, a lot of Warren's really good investments were made early on. And he's, like I said, he's one of the one of, if not the best ever. And you don't just replace him, but I think it's going to the wait and see approach.
And it goes back to the diversification, right? And would you say that that's one of the key factors in that?
Yeah.
Good. Okay. Well, now that was a quick background review. So we just talked about War and what he was able to do. When we have clients that come in and they ask, when you manage their money, and when we do it in house, right? I guess that's the term that I'm going to use. What does that mean to you personally? But somebody says, "Hey, how do you guys manage our funds?"
Yeah, I think that's to me that was the biggest difference coming from where I was in Lincoln to PFA, and I it opened my eyes a whole, along with many other things. I think you can allude to this from your experience, but um, you know, Mark, I'll tip my hat to him. He's our money manager, and does a really good job building custom portfolios. We don't outsource that. A lot of advisors, and I'll speak to where I came from previously, was we had a bunch of different models that were pre-built by somebody else that weren't in the walls of our office. They lived in a different state. And I would walk into a meeting, get to know your situation, slide across the proposal of a model portfolio, and kind of I just had a sales pitch per se, right? Like it just sold you on a concept that we were trained on, and then you agreed to it. I would do the paperwork. And then on an ongoing basis, we were just kind of the middleman. We just met with you to do a review to tell you how good this outside money manager was doing or how bad they were doing, and we needed to make a change. But we had no like hands-on or understanding of what was actually taking place in your portfolio. And I think that's what's different here. And by not having that third party, I guess, I'll go to like the fees. It seems like everyone's kind of more fee sensitive nowadays. There's a constant, drive to lower fees. And I think we're on the same side of that. Like we want to be doing things that are in our client's best interest. We're aware of what it costs to be invested. We try to use low cost investment options. But not having another third party, another hand in the pot to do the money management is important for clients, right? It helps drag the fees down. And then, just having with us being more involved on the day-to-day investment of the portfolio, I think it makes those phone calls, those calls we get if they are fearful, like knowing what they own and some of the positions that, Mark has created inside the portfolios, specifically for those in retirement, those taking money out, there's positions in there that are helping them. They just don't understand that, right? So educating them on what they own, how those positions work, how those positions will be beneficial during periods of volatility or market drawdowns, and being able to make changes on the fly internally. Because again, we do all those trades internally, so we don't have to call somebody else. We can go in and swap a position out of a portfolio based off of what's happening. And I think people like that. Like they like the idea that we actually know what they're doing. We're hands-on with everything. The same person sitting across the table from them is the same one that's making all the decisions as to how their portfolio is invested. So again, Mark does an incredible job building the portfolios. He spends numerous hours throughout the course of every month, quarter, reviewing, different fund options. And that's the same thing, again, going to keeping up with the industry. Like, I think he's a really good example of that. Like, he's constantly researching new funds and not using funds that maybe don't have a proven track record, but still looking at new ways to invest portfolios to, put clients in the best position as possible.
Yeah, it's actually quite interesting, coming over to PFA and then all of a sudden, we're on a group chat or, emails that are coming through on the weekends, Sunday afternoons, which if we really do our job right and we care, that's going to happen.
Yeah.
It's fun to see those emails come from Mark on a Sunday afternoon saying, hey, we should look at something like this, right?
Mark's bored this week.
So there's been conversation about other firms and how they outsource that.
Do.
What made you to decide to keep that in house? Because you could, right? You honestly could.
But while this is a topic I feel like we could probably talk for an hour on, and most people are going to get really bored, and there's going to be a few nerds out there that you really are interested. So I'll try and keep this kind of high level. But
So first of all, there's got probably a misnomer about in-house outsource because we get tons of research through Schwab and other places. So this isn't me sitting at my desk by myself doing all this stuff from the ground up, right? So yes, the decisions are made here, but through Schwab, we get recommendations. Like, we know what Goldman Sachs is putting in their portfolio. We know what BlackRock's using. We know what American Funds is doing. Like, we know what all these big institutions are doing. And so when we get all that research, then it's up to us to kind of put it together to meet what the client wants. And I think that's the real differentiator, is because we have on a much smaller scale. Like, I have funds that I use for this and things that I use for this, which you could call those models, but it's not a okay, fill out this questionnaire. You're a moderate risk level. Let me pull out of my mag the moderate model, and poof, you're in. And that's what I think a lot of people do. And really, when you're able to take all the research and build something specifically for that client, that takes a lot of time, takes a lot of work. And I think that's the difference. And it's kind of back to the fiduciary thing. Mark alluded to this, is that if we didn't do it that way, what we could easily do is say, we're going to put you with this money manager, and we'd spend 30 minutes telling you how smart this money manager is. And then the next 3 years, they aren't very good. And we say, well, it's not our fault. It's that money manager's fault. Yeah. So we're going to fire them. We're going to go hire this guy. And then I spend 30 minutes telling you how good this guy is. And the whole time, I'm charging you my fee, and they're charging you their fee. And, at the end of the day, you're paying 30% more for me to just fire managers every 3 years because they don't meet the expectations. So, yeah. So the reason we do it in-house is because I think it's the right way. I mean, I think it's right to do it that way, number one. But number two, I can save the client money. And ultimately, if we underperform, like, the client's looking at me. I'm not saying, oh yeah, that third-party money manager is like, it's me. Like, maybe something just happened where we were aligned differently in the market, we were in a different direction. Like, nobody's perfect in these markets. But there's a lot of time spent on our side doing this, what we think is the right way. And at the end of the day, it's right for the client. Saves client money. There's much more emphasis on an individual customized portfolio. And we still got all the research and all the manpower behind us providing recommendations and analysis. Like, we don't have time to do that, right? Some of these firms have 60 analysts with Ivy League degrees. What up that? So we get all their research, right? Like, we know what they think. So I can say, oh wow, these people think this, and this, and then we put it together. And I would say on the opposite side of that, and I think, Brad, you might be able to talk to this better than me, but the way people approach it on the other side is, like I said earlier, they said, well, we got this team of analysts at our home office, and these guys are the smartest people you've ever seen, and they're going to build this model for you. And they're basically going to say, that there's some sort of level of expertise that justifies the higher fee. And so I think, coming from where you came from, that maybe you can talk about kind of how that was prior, the difference. So the sales pitch, if you will, the way people talk about that.
Right. And it was a package deal, right? Like, so where I came from was more of that insurance world where, we would do the personal insurance, whether it be house, cars, farm, ranch, whatever that case may be. And then you try to build off of that. Well, then we started to get into what they called the wealth management piece, is the term that I'm going to use. I think that's a pretty broad term, but it was okay, we're going to sit down with our current insurance client, and we're going to say, we've got these managers clear over here in Canada or whatever the case may be, but they're the best in the world. They're one of the top in the world. Let's use those guys. And you didn't know them. You didn't have a relationship with those guys, those money managers clear over there. And it was almost like there was a little bit of a disconnect, right? Yep, we're gonna use this, like you said, this model portfolio that we use for every client that says, hey, I'm in this risk range, and here you go, right? And then you never see anything again until things weren't performing or whatever the case may be, and then it's moved into a different one. It really didn't have that personal feel for me. It really didn't have that connection with the client and the person that was managing your fund, right? There was just that third party agent, is what we're going to use, that just kind of pushed it along and pushed paper. Like you said, I would say,
yeah, it's kind of backwards in the way we do it. Mark and I have talked about this before, because at the end of the day, maybe we're the dumb ones. Because we do way more work and we charge less. Yeah. Which, that's not how most things work. But when we're talking about the way we charge fees and the time we spend in building in this case, we're talking about investments, not financial planning, but when we're specifically talking about investment portfolios, when you look at the time we spend versus the price we charge, it's almost backwards. You guys have both played golf with me. I'm probably one of the worst golfers Mark Platt's ever seen. And there's a reason, because I could much easier charge a higher fee, bring in a third-party money manager, and go work on my game, right? I could do that.
Yep.
But at the end of the day, is it right for the client? No.
Yep.
And I think that's still what it comes back to.
Yeah, I agree with that. I mean, just that I'm the worst golfer at that. That was probably, that was Tanner, if you're listening, more strokes for Mark, so more pause. But yeah, I think to that same point, like where I was at in Lincoln, or before this in LinkedIn, it was like a one size fits all. And then when you see the other side of it, you start to like think through it. And, if you're watching this video, just think like, is one size fits all how you want your investment portfolio to be managed, right? Every single person's financial situation is different. People have more money, people have less money, people spend more money, people save more. Like it can't, that's like the one thing. Now, maybe while you're in the accumulation phase in a 401k plan, there's really not a whole lot you could do. I mean, you're limited to the fund investment options in the plan. So a lot of your younger savers are going to be pretty similar in terms of portfolios. I'm thinking more of like, if you're a retiree, I know where I came from. It was like, okay, you're entering retirement. You must be a 60-40 portfolio, right? Like 60% stocks, 40% bonds. We're going to rebalance it one time a year. And we never made changes to the positions that they owned, regardless of what happened, right? Then you start to think through that and you see like the market situations, then you see the other side of it and you're like, that seems really dumb. Like, I mean, really, like it just seems like that's an easy way out. We had a lot more time, like we were not near as busy, but we didn't do any changes. Like we just had a 60-40 portfolio. We believed in the strategy and we sold to the client that strategy was going to work without actually taking a hands-on approach to do something different.
Yeah, everybody's situation is a little bit different. That's what I love about working here. And I'm a part of this group is, there are times where all three of us will sit down and we'll bounce ideas off of each other on how to help clients or how to do something different inside the firm to continue to grow and move forward as a team.
Yeah. I think changing gears just a little bit on that, just because you were talking about that. So I feel like on the other side of the fence, we've talked about insurance a little bit as if it's a four-letter word, and it's people truthfully need insurance twice. Otherwise, the whole plan collapses like that. So you think about the pyramid; it's near the bottom of the pyramid. And so I will say, when it comes to insurance, I think Mark and I will both admit this. If you needed insurance, we needed term insurance, we could do it. And we would spend a lot of time, a lot of due diligence for a client getting the right insurance policy because we weren't doing it every day. So, like, if you come in and you start asking me about all this market stuff, like I'm pretty, off the top of my head, I'm going to give you a pretty good idea what you need because I'm doing that stuff every day. But the insurance, we would almost have to relearn all the policies, all the carriers, all the things every time somebody came in with anything more complex than the term policy. And where I'm going with this is, so Brad is part of the reason Brad came on is because of the insurance side. So now we basically have somebody doing what I'm doing with the markets and the portfolios, doing that on the insurance side. So if you kind of want to walk through that, just all the different things that goes into the due diligence and making sure it's right for the client, all of those things too on the other side of the place.
Yeah. Being able to put together a full financial plan or do more like of a holistic approach in-house is huge. Coming from the insurance world, it was like, okay, I've got your home and auto. We're going to throw a term life insurance policy on here to make sure that we cover any debt or whatever it was. It wasn't like I was trying to act outside of the lines or anything along those lines, still following the guide rails of being the best steward that I could for my clients, right? But it still had that kind of like, hey, we're going to put a discount if you do a life insurance policy with us. That's not here. It's literally, hey, we're going to take the whole picture. We're going to look at your income and your debt, and we're going to look at, the college education funding. If we need to do that, or cover that with the term policy. And we have the opportunity to look at a bunch of different products and figure out what fits that client best, Is it a term product? Is it a whole life product? Or we want to make sure that we have the convertibility with it. There are a ton of different things that go into the thought process now with the life insurance policies that we have access to. And it is no different than the research that you get from Schwab. I have the availability to go through that and see what products match what companies are doing the best that they are, which ones are good stewards of their financial standing, whatever the case may be. And again, it gives us that opportunity to say, hey, we're going to put this financial plan together. But if we don't have this piece, it could break the whole thing apart. And I'm glad we used the word period, because it is. I mean, it's part of that.
Yeah. And it's, when it comes to whether it's investing, insurance, we always, especially in the classes, we always talk about how products are really the last thing. So once we know what you need, the last step is to figure out like which fund, which policy, which company. Like that's the last thing you do. And sometimes that's flipped around for other people. But on the insurance side specifically, like if I do a plan, we just did this for some people. I know I can tell them you need this type of policy and you need this much coverage. Like that fits your plan. That makes sense. And here's why. But then once Brad takes over, I don't have to go figure out which carrier meets all those needs. I don't have to go figure out which one has the best prices. I don't have to figure out which one has the best convertibility. I don't have to figure out which ones look more favorably on this health condition versus this health condition. So I think having that end product expert has taken at least our insurance recommendations, it's taken a lot of time off our hand and really streamlined it.
Yeah, I'd also say like bringing someone in house to do that is like you're the investment professional. Brad's kind of our life insurance guy. That's a part of creating a better experience for our clients, creating a better plan. Like that was a part that I'll admit that I didn't spend a lot of time on, because to Mark's point, like we kind of have to relearn it. You're not constantly, because we're not constantly selling products all the time. It wasn't something we did a ton of, right? It was more or less, I did a lot of reviews of what people currently had, but Brad has a whole nother level of understanding and can really dive into these policies and figure out, from my side, something a little different. I feel like we see a number of clients that maybe have too much insurance or the wrong types of policies, and being able to have somebody that is knowledgeable, that really doesn't, I mean, we're truly doing a review of that in their interest. Brad doesn't get paid money when I send him a bunch of policies and be like, hey, this person has 6 life insurance policies. I just think they probably don't need that much. Take a look at it. And Brad spends a ton of time looking at it, comes up with maybe ways to combine things, get rid of unnecessary policies. There are certain people, like types of, I'd say everyone's kind of a target, but there's certain things like healthcare professionals or first responders. There are primary targets for these types of policies too. And you see them come in with a ton of insurance, and they're spending most of their cash flow at a young age going into something that they think can be used for retirement. And then you actually educate them on what it is that they own. Brad does a really good job of that. And then they sit there and they're like, oh, well, that's not what I thought I owned. And now all of a sudden we catch that hopefully early enough that we can then pivot as part of the plan and get them saving and still get the coverage they need, just get them in the right types of policies. And that's been a huge advantage, I think. And that's what makes PFA different, I feel like, is we're able to add people like Brad in positions to hopefully do everything in-house.
You say, then that's kind of an extension of what we started doing with Whitney Medicare insurance 10 years ago. When somebody would be retirement age. The old way was, okay, if you're going on the Medicare, you're going to need a supplement, you're going to be Part D. I have no clue which one because I don't have. But then so Wendy started doing all that for us, the same thing. Like, I know what these people need. I just don't know which product. So if you want to talk a little bit about how that kind of works with Planet Insurance and Whitney too, just the whole insurance side, because it's not just life, right? I mean, there's other things that go into that.
Yeah, I mean, you're right. It's not just the life insurance. It's also looking at, like you said, with Medicare and the Medicare supplements, Part A, B, and D, making sure that those are all set up right for those clients, so we have the availability to do that in-house. And then there's another aspect to the financial plan that can really rule in retirement, and it's long-term care. We can also discuss the long-term care possibilities in-house with me or Whitney or however that ends up being. But it gives us that opportunity to say, hey, we put this financial plan in place. Now we've got the life insurance in place. Let's make sure this other aspect is in place. Make sure that your Medicare or Medicaid, whatever it is set up right for the future. And then if long-term care is a concern, we can look at that as well. Being able to continue to build that holistic approach, put this team together, and who knows, soon, in 5 years, we might find another aspect of this that we need to bring in-house to try to make sure that we are doing the best that we can to help the clients with the people we have.
And I think the value for us, at least, is when we're a fiduciary, we're doing a financial plan, we're recommending what's best for the client. we know when we do it in-house, I know that Whitney is not necessarily recommending Medicare Advantage plans. We've all seen that what's happened over that last. I know that Brad's not going to start recommending whole life to much from 5-year-old clients. Like, we know that our fiduciary responsibility is met because we make a recommendation that's best for them. So when they cross that fence, all of a sudden Whitney and Brad come in and say, okay, here's all the companies, here's all the options, here's all the things we talked about. We know that they're still going to make the recommendations right for them. And all that used to be a problem is we'd outsource and we'd say, okay, go talk to this person. And they come back with something that's like, no, that's not what you need.
Yeah.
And so having it all working together and making sense where they agree with our recommendation and vice versa, I think that adds a lot, takes a lot off the client's plate and hopefully adds a lot of trust too, that they know every aspect's being looked after there.
It's a switch from going from sell to recommend, right? We're not trying to sell product. We're recommending a product. If a client tells us no, at least we've done our job. We've asked the question.
Yeah.
We're trying to put our best interest in there, right? Like, we're trying to provide the best advice that we can or recommendation. And then it becomes to, it's in the client's court at that point in time.
Yeah.
So, well, is there anything else you guys would like to chat about?
I mean, we've drilled into everything. So I think, Philip, you and I are going to...
I don't want to have to do this again, so let's think.
We are going to recommend some golf lessons for our fearless listeners. Yeah,
Yes, I'm sure.
You find me the time to take those lessons and I will gladly.
Well, listen, I played golf with you maybe once or twice. I'm not going to say you're the worst in the world, but if there's water involved, it gets really difficult.
It's a good big word about it. Sure. Pretty sure the first time I went golfing with Mark, he was out at the lake, and before the round started, he drove off to the equipment shed and was dinging through a bucket of moto or golf balls. And I was like, what are you doing? He's like, I just lose too many. I'm just preparing for the round. So, yeah.
Well, as we get ready to end this, is there anything that you would want to tell a potential investor that is looking at PFA, looking at our group, to consider before walking through the door?
I would just say that I think regardless of where you're at in life, whether you're younger and just starting to save, we'd probably have somebody on the team that will fit with you and provide recommendations, and you'll get the service you need. If you're a business, it needs to outsource the 401k management, meaning when you're a business owner, you have a fiduciary responsibility to your employees. So if you have a 401k plan, you have no idea what that plan is, and you need to make sure you're meeting your responsibility. We have Mark to do over that. We have somebody who's an expert in that area. If you're a retiree, if you just, if you inherit some money, if you're a foundation, all those different things that require a little bit higher money management, we have somebody to help with that. If you just think you have an insurance policy that, your mom bought for you 40 years ago and you're not sure if it's the right policy anymore, things like that, we have somebody to help with that. So I think what we've been able to build here is really a financial advising firm that can help people from all walks of life. And, we'll be honest with you and really put our best foot forward and do what's best for you, regardless of what that looks like.
No, I think just to kind of reiterate what Mark said there, but I think there's another part of like our business that your people, I think, are fearful to make change. Like they're just routine. Maybe they inherited an account at a different firm from their parents and they've just left it there, but they don't really know what the next step is. I think knowing that, again, I hope through this video, it reiterates the fact that we're here to educate. Like, we have a number of people that come in for second opinion services. It doesn't cost you for us to just look at what you have. Some people just don't understand what they have and they just need another set of eyes to understand it. If you become a client, that's great. But if we could just help you understand where you're at or give you a little carrot of advice, something that you can go do to help better your financial picture going forward. I think it's important that people know that, like, there's not a charge for them to just come in and say, hey, I've got this, take a look, And I think Mark has a number of clients. I have a few that, we don't necessarily manage their financial assets per se, but they really value the advice that we provide. So there is an arrangement where people can just pay a flat fee per se, and we can provide investment recommendations and advice. And that's a whole nother side of the industry, but I don't know that people know that. So.
And I would echo that. The cool thing about it is we have the availability. We're open. We're growing. If you need advice, if you want to just chat with one of us, that possibility is there.
Yep.
And continuing to grow as a team, grow as a community, and still taking on new clients. We're still open for business, and anybody, any walk of life, if you have questions, we're here. I mean, that's part of it.
I think one of the neatest things I've seen the last 10 years is, we talked a lot earlier about North Platte and working with community and working with neighbors. And we're not just saying it, it's really the type of firm we are. But we've seen that extend past our borders. So we have a very strong group of clients that we love working with in Kearney, in Grand Island, in Hastings, in Scottsbluff. And it's not because they're watching a video and say, wow, these guys really care about North Platte. It's because they're watching the video and they say, wow, these guys are really kind of family-oriented, local community firm that we can work with. And so they don't mind that we meet them at our satellite office at Kearney. They don't mind, Scottsbluff, wherever it's at. We have a lot of great clients across Nebraska, and we've seen that start to spread because people want to work with this type of firm. And I think, opinion here, but I think as you get into some of the bigger communities, finding firms that are kind of built like we are from the inside out comes a little bit harder. So I do think that matters. And it's been really neat to see kind of the growth outside of just the community too. And the most rewarding thing is obviously working, our current clients, and, we probably don't say it enough, but, we if you're a new prospect out there and I have a current client coming in, you're going to have to wait. I'm sorry our current clients always come first.
Yep.
And it'll always be the case. So yeah, we're growing. We love to work with new people, but we always put our current clients first. And every Christmas, one of the neatest things is, how many clients send us cookies and Oreos? And it is so neat to see just how it kind of becomes a big family over time.
Cool. Yeah. And kudos to the current clients and new clients that are coming in. Thank you guys for all of the business, and thank you guys for taking time out of your day, and obviously, thank you both for what you have started to build and continuing to build. It's really a neat process, and to see what you guys have done. So kudos. And thank you to all of our current clients out there. And if you're considering jumping on board with PFA, please don't hesitate to reach out. Obviously, we will work with just about anybody, unless maybe you're sitting in prison or something along those lines. I'm not sure, we'll shake you. But so awesome. Thank you guys.